Hey, good morning. How are you?
I'm good. It's Friday.
I know. Are you all settled back at home? Everything
Mm,
got everybody and all the critters in the right place and
yep.
doing everything? Perfect.
Been a good week?
Yeah, it was a good week this week. We had a lot of changes in our markets, like a lot with the tariff
Yeah.
stuff.
Yeah. Explain. I'm curious. How did that affect everything?
Yeah, I'll show you. It's just our volatility. Like when I say volatility, what I mean is basically the distant stuff moves.
Hmm.
Went from reliable and respectable to insane, right? So which is actually a good thing as a trader, right? Because we want movement. The more
Right.
movement,
The
the
better.
better, right? As long as we know how to, take advantage of that. But the
Sure.
scary and the really, really, really sad thing is we gave back over this week, we gave back every dime of 2024 gains in the stock market.
How?
Just with all the volatility and with all the trade war stuff going on. Yeah. So everybody's
Oof.
20, if you were just, long the market, making money as it goes up, yeah, all those gains are gone
Oof.
in a matter of a week, right? There's a phrase that we use is the stock market goes up in stair steps and it goes
Right.
down in elevators, right? So, because the reason for that is there's two things that drive the stock market: greed and fear, right?
Yeah.
And fear is stronger than greed. So the fear of
Right.
losing what you have already, right?
Yeah.
So yeah, so you saw,
Jeez.
yeah,
So that would have really affected, make sure I learned this right. That would have affected the people that were actually investing. So people that were in it for the long term. It didn't
correct.
affect so much the day trading or the swing trading because that
No,
was
very
quick.
good. Very
Okay.
good. Yeah, no, it just affected, but when we learn to take advantage of things like this,
Yeah.
it's like I always use the example if, say you go in like you wanted to buy your fence, right? And you look and with inflation and everything, and you look your fences at the start of 2024 prices, you're like,
Yeah.
sweet, right?
Yeah.
It's a bargain.
Yeah. It is.
Um,
And what's
so
funny? What's funny? You're so right because that's actually what we're doing today. Is we have a giant fencing project. So
oh, there
you're
you go.
you're spot on with your analogy because damn,
Yep.
that stuff's expensive. So I'm curious,
Yes.
for someone like you, right, that understands all this and knows how to.
Mhm.
So how do you take advantage? Do you buy now because you realize it's probably going to go back up at some point, or I mean, I'm just
What I
curious.
do, okay, as far as my investment part of things,
Yeah.
I have the same amount of money that goes into my investments every month
Yep. On the
on the
7th.
7th. Yep. But when I see opportunities
Right.
like now, I will add a little bit extra.
Extra. Okay.
Yeah, just kind of on my
Hmm.
own. I still have the normal thing going. But yeah, I'll add a little bit extra on my own
Okay.
during these big, pullbacks.
Right.
And
Because I mean, logically, yes, we're way down, but I mean, I honestly believe it's going to come back. It's not going to stay and continuously be where it's at. Or am I totally wrong? Do
no,
you feel
you're
like,
you're you're 100% right. Let's look at that because this is a good time to this is a good time to talk about this because of
yeah,
where the markets are. Let me do this real quick. See if it'll let me do this. Okay. So here's 1929. Okay, you've
the
heard
year,
of
the
the
year
stock market.
1929?
What's that?
The year 1929?
Yeah, like the stock
Okay.
market crash. You've heard about the Great
Yeah,
Depression.
yeah.
Yeah.
Yep.
Okay, so this is 1929. Okay, this is what happened.
Jeez.
This big, just massive destruction, right?
Wow. Yep, because I see all the red candlesticks.
That's right. Yep.
Hmm.
So each one of these, we're on a 6-month chart. So each one of these candles is 6 months.
Yep.
Okay.
Okay.
So we had this big crash in 1929. Okay. And then, right, all the
Good.
smart money, if you want to call it that, or
Yeah.
big money, is buying down here.
Yep.
Right. Well, look what happened after the crash. Now, this is World War II area.
Jeez.
So we ramped, way up.
Wow.
Right. Now here,
Jeez, that's insane.
yeah, here, you've heard about the great financial crisis, 2008, the
Yep.
housing
Yep.
bubble, all
The
that.
housing bubble burst. Yep.
Yeah. Well, here, first off, here's the tech bubble. I don't know if you've heard about like when the tech bubble burst.
Yep.
But there's the same thing, right? This was from
Jeez.
January of 2000 down to July of 2002.
Wow.
And we made it all back. And then we had 2008, right? The great financial crisis, 2008. So there's the great financial crisis in 08. Well,
Okay.
then look after that crisis, right? We've gone
Wow.
straight up. I mean, the great financial crisis, we were down at around 800 for the S&P 500, and now we're at 5,200.
Jeez.
Okay, so you can see these big dips that we have,
Right.
they rebound. It just takes time. Here's 2020. Here's COVID.
Okay.
Okay, this is COVID. So we had a big drop
Yep.
on COVID, right?
What was
Well,
that
if I,
second drop? You see the second drop in 2022, it looks like?
yep,
What was that?
just 2022. We had that bear market for a while in 2022.
Okay.
There wasn't a great big catalyst for it.
Okay. Interesting. Okay.
Yep. But look at what happens. So from our lows here in January of 09, okay, that's January of 09, to our highs right before the
Jeez.
crash of COVID, right? Look what we did. Okay. This
Wow.
is 50% of that move.
Mm-hmm.
Okay. So we came about 50% down from the low to the high, and we made about a 50% pullback or correction,
Wow.
if
Yeah.
you want to call it that. Now, from COVID lows, there's COVID lows, and there's 2022 that you were just looking at.
Yep.
From COVID lows to 2022, there's 50%
Yep.
perfectly right
Yep.
there.
Interesting. Okay.
Yeah. And then from our big sell-off right now,
Yep.
from those lows, from those COVID low or from the 2022 lows,
Yep.
50%.
Yep.
So this is,
gonna-
remember we were talking about the half off sales?
Yep. That's where we're at again.
Yeah, we're pretty much at a half off sale.
Okay. Okay.
Yep. So when we have these big corrections or whatever you want to call them, yeah, they rebound.
Yeah.
They rebound, but everybody, starts getting really
Freaking out.
squirrely, right?
Of
Because
course.
you see your investments losing a dramatic amount of value,
Right.
and nobody
Right.
knows or nobody, realizes that, not nobody, but a lot of times there's buying opportunities, but where you feel bad is, the people that were at retirement,
Ah,
right?
right. Now
And
they're
then their
screwed.
pensions and all this other stuff. And then they're like, well, crap, now it's,
You're gonna have to wait.
yeah.
Mhm.
So, but this is a pretty, now, not to really, really weird you out, but, and we'll get into this more when we get into the trading, but, these are, have you ever heard Fibonacci?
I've heard the name. I don't know really.
Okay, it's this
In
mathematician from a billion years
okay.
ago.
Okay.
And you learn that everything in nature basically moves in a series of Fibonacci numbers. And you don't even need to know what the numbers are. But a lot of that is actually ingrained into our stock markets. Okay. So what you see isn't as random as you think. Okay.
Okay.
And when you learn to understand that. So let's go down to a daily chart.
Yeah.
Okay. So now each one of these candles is a day. Well, here's
Okay.
that lows to highs that we were talking
Yeah.
about.
Yep.
And there's 50%
Yep.
right there. Well, guess what? When we bounced, right? When we bounced off our 50%, guess what held above us? 50% from the highs.
Wow.
Isn't that something?
Wow. Interesting.
It's not as
Mm-hmm.
random as you could think.
Right. Absolutely.
And when we trade, all we're doing is we're putting as many probabilities as we can on our side,
Uh-huh.
right? That's all trading is. It's probability, and then it's just risk management is all it
Sure.
is. So, but when you start to understand, like I'm showing you, and we'll get into this down the road, but when you start to understand that our markets move in these measured moves, that's what I call them. Our markets actually are moving in these series of measured moves. You
Yeah.
can put yourself on the right side of the probabilities,
Yeah.
right? I always call it the two green spaces on a roulette wheel. If you've ever seen a roulette
Yeah. I
wheel,
have. Yeah.
okay, there's black and red, right?
Yep.
Then there's the two green spaces.
Yep.
The two green spaces are what put the probabilities in the casino's
Interesting.
favor.
Okay.
So they know over the course of time. So it's not a 50-50, right? Casino's
No.
got a tiny, tiny, tiny edge with those two green spaces. And over the course of trades or over the course of spins of the roulette wheel, if you stick to the same probabilities, you're going to end up on the good side.
Right.
Right. So that's all we're doing when we're trading is we're just putting probabilities on our side. And when you
Yep.
understand kind of the measured moves and how things work, and like I said, we'll get into that down the road. That's all we're doing is we're just putting,
Right.
we know that there's a higher
Makes sense.
probability of one thing happening over another thing, right? And that's how we use it, right? So, okay, so I'm glad you actually took me down that rabbit
Good.
hole, because what is going on in the markets right now is really unprecedented. The
Right.
amount of movement that we have on a daily basis is legendary. Like this has never,
Wow.
ever, ever happened.
Huh.
So let me show you this just so you understand where we are. I mean, this is a perfect time for you to be learning too,
Good.
because
Good.
stuff is moving around, right?
Right.
So let's do this real quick. Um,
Really quick, a
yep.
quick question. I don't even know, what is the S&P 500?
Okay, the S&P 500, there's 4 major stock indexes in the US.
Okay.
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 There's the S&P 500.
Yep.
Okay. There's the Dow Jones. You've probably heard of that.
Yep, I have. Yep.
Okay. There's the Nasdaq,
Uh-huh.
and there's the Russells.
Russell's?
Yeah.
Never heard of that one.
Yeah.
Okay.
That's the smaller one. So
Okay.
in each of these stock indexes, okay, all they are, okay, the S&P has 500 stocks in the index.
Uh-huh. Okay.
Okay, that's why they call it the S&P 500. All right, and they change which ones are in there based on overall performance and all this stuff. It's supposed to be like the top 500
Top 500. Makes sense.
stocks, right? And then
Okay.
you have the Dow Jones, and the Dow
Yeah.
only has 30 stocks in
Oh,
its index.
wow.
Okay.
Okay.
Now the Nasdaq has 100 stocks in its index.
Okay.
Now the
Okay.
Nasdaq is super, super, super tech heavy.
Ooh,
So
okay.
like Apple,
Okay.
Facebook,
Yeah.
Nvidia, Netflix,
Got it. That's in there.
Google. Yeah, they're super tech heavy, the Nasdaq.
Okay.
And then you've got the Russell, And the Russell's has 2,000 stocks in it. Okay, but they're all what are considered small cap stocks. So they're
Okay.
smaller companies.
Okay.
They're still publicly traded, right?
Right.
But they're
But
smaller.
right.
You're not going to have like Apple in the Russells,
Got it.
right?
And can any if my stock if my stock's in the S&P 500, can it also be in the Dow Jones, or if one's in one, it can't be it
No, they can
can.
be in others. Like
Got it.
in the Nasdaq, like Apple, stuff like that. They're also in the S&P 500.
Got
Because
it.
the
Okay.
S&P 500 is like the 500 biggest. Now, what these indexes actually are, okay, is
Okay.
they're just a mashup of all those stocks,
Okay.
right? So like in the S&P 500, it's a mashup of all those 500 stocks. And different stocks are weighted differently. Like in the Nasdaq, just take for example, the Nasdaq has 100 stocks,
Yep.
right? Microsoft is the most heavily weighted in that index. So all it is an algorithm is attached to each one of those indexes.
Okay.
And it crunches all the numbers, right, of all the companies, and it spits out a number,
Okay.
okay, based on whatever algorithm, right?
Ah,
And that
okay.
number, whether that number is going up or down, that number gives us the overall view
Ah, of the whole.
of kind of how the markets are doing. So
Got
if the
it.
S&P 500, if you have the 500 in their minds, 500 of the best companies, and the S&P 500 is going up, then that tells you that, hey, things are pretty healthy.
Got it.
Does that make sense?
Yeah, it totally makes sense. So like when
And
I see that totally makes sense. So what I've heard in the news, like just random things, it'll say the Dow Jones was at da, 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 da today and it went down. And the
right.
Nasdaq, so it's just saying the overall performance of all the stocks put together in that group. So
Yep.
got it.
It's
Makes
just an
total sense.
algorithm that's attached that spits
Yep,
out however
makes
they
total
figure it.
sense.
But the
Okay.
one thing about all these stock indexes is they're not weighted the same. So there's 100 stocks in the Nasdaq. Well, each
Yep.
one isn't
Ah,
rated like each one doesn't get like 1 point, right? Like
got it.
Microsoft is the most heavily weighted.
Yep.
So
It counts a lot more than
it counts a lot more in that algorithm than like Joe and
got
Bob's
it.
Joe and Bob's computer shop down the road that's in the Nasdaq.
Okay.
Microsoft counts more than that. So anyway, all you really need to know about them is it's that mashup,
Yep.
and there's a computer program attached to it and it spits out a number.
Got
If
it.
that number's going up, then it's healthy in theory. If it's going
Yeah.
down, it's not healthy. It's just an
Okay.
easy way to kind of gauge relative strength and weakness.
So on a day, and this is just a you question, on a daily basis, are you looking at the S&P 500, the Dow Jones, the Nasdaq, and the Russells? Are you looking at the performance of all four of those every day when you analyze what's going on in the stock market?
I usually just follow the and I don't want to get too far in this, but the S&P 500 is the one that I
You
really pay
follow.
attention to.
Okay,
It's
got
the
it.
biggest, right?
Yep.
It's got the
Yep. It's the
most stocks in it.
coolest.
It's the biggest.
It's where the
And
popular kids hang out.
yes,
Okay.
and understand this too, that about 80% of the ships rise and fall with the tide, which
Okay.
means if the like S&P 500, if our overall markets are in an uptrend, like if they're trending higher and higher and higher, then
Yep. Yep.
about 80% of the stocks overall are going to trend higher and higher and higher and higher.
Okay.
Okay.
Yep.
Now, if like the S&P 500 in our broad markets, when I say broad markets, I mean those four that
Yep.
we talked about. When our broad markets are trending down, then about 80% of the stocks are going to trend down as well. So
Okay.
we don't want to buck the trend, meaning if the S&P 500 is just flying, right? It's just going
Yeah.
up like crazy, or let's flip it over. If the S&P 500 is going down, 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 and it's just crashing, we probably don't want to be buying stocks at that point, expecting them to go up,
Okay.
right? Because even though stocks are an individual company, you know, investors and traders, the ones that have enough money to actually move the markets around, you know, they're not going to be, you know, expecting certain stocks to be going up while the overall markets are going down.
Yep.
It just
Okay.
doesn't, it's just not, it's not a high probability. There we go. We're back into
Right.
probabilities, right? It's not a high probability thing to do. Now, when the
Okay.
markets are screaming higher, right? Like the S&P's flying and everything, and they're going up, 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 then yeah, the stocks that you have and that you've invested in are going to go, you know, they're not, it doesn't go like point for point, right?
Okay.
With it just goes with the trend, right?
Got it. Yep.
Think of
So,
it as headwinds and tailwinds, right? If the
okay.
markets are going up, your stocks have a nice little tailwind behind them.
Okay.
If the markets are going down, your stocks have a headwind, yeah, against them.
Okay.
Yeah,
Okay.
absolutely. Okay, so what else? Oh, I was going to show you this.
So this is
So
the S&P 500 that we're looking at?
yes,
Okay.
what I was going to show you
Oh my God.
was, so look at the volatility. This is back from, let's just look at 2024.
Yep.
Okay, let's start at 2024 right here.
Yep.
Okay, we're on a daily chart. Okay, we're on a daily chart. So
Yep.
see, each one of these candles is a day,
Okay.
right? And it's moving nicely,
Yeah.
right? It's kind of controlled. There's kind of a little sell-off, and it's kind of controlled. Now here was like, this looked huge when it happened, right?
Yeah.
But it's nice and controlled. This was our kind of our volatility level. Like here's, let's just look at this. Here was a big day.
Oof.
Okay, so this went
Yeah.
from 5205 up to 5356. So this went
Wow.
about 150 points in a day.
Yeah.
Okay, in a day. All right. So this was all the movement in 2024. Remember, that biggest candle was 150 points in a day. All right, and then we
Yep.
come up. These candles now, okay, this one went from 5420
Oof.
down to 5086, so almost 400 points.
Wow.
And this one went from, call it 5,000
Yes.
up to 5,500. So this one went
Yeah.
up 500 points. So in all of 2024, we picked what looked like around the biggest candle, and the biggest day was 150 points.
Okay.
Now we're going up and down 300 to 500 points a day. So that's what I'm talking about. The volatility has really
Huge.
like
Oof.
increased, right? So that's what I
Yeah.
mean. Like it's a great time to be learning this, because everything is still, and we'll get into this, but everything still is technical, but
Right.
we just got much bigger movements, right?
Yeah.
Much bigger movements. So, okay, so what questions have you come to mind?
Oh my gosh. So, I mean, no, you're explaining it really well. I actually am understanding a little bit the S&P 500. I'm understanding how you're looking at it. I mean, I think the biggest thing, there's a lot of red in there. There's a lot of drops, but I think it's just understanding, looking at the overall trends and not panicking when you have one of those shitty days. And,
Right.
I feel like that's going to be a hard thing because I'm an emotional person, but I think it's so important to understand the long-term trends. This is amazing to look at. I'll be quite honest
Yeah,
with
but
you.
remember when we're trading, don't forget about this. When we are trading, not investing, when we're trading,
Trading.
when we make a trade,
Hmm.
we know ahead of time what our risk is.
Yep.
Remember with the stop loss,
Yep.
right? So if it goes against us 1,000 points, well, we got out with our
Right. With your stop loss.
$100 loss,
Yep.
right? So that's how we control our business,
Yep.
right? That, like we're talking about keeping expenses down. right? That's how we keep expenses down.
So I'm curious with the way that the markets, I mean, I understand the investing piece right now and makes sense, and they're getting in at 50%. But for traders, what are you doing right now with it going down? And I mean, how I would feel like
Okay.
I mean, are you trading right now with what's going on?
Okay. I will introduce you to something. And I was kind of waiting to introduce this.
I'm jumping too far ahead. I'm sorry.
No,
It's
you're not too
my
far ahead.
brain. It's
No,
just
no, no, you're not too far ahead because you need to know this if we're going to go forward. Okay.
okay.
It is easier. This is going to blow your mind. It is
Okay.
easier to make money when the market goes down than it is when it goes up.
Okay.
Okay. We trade both sides of the market. Okay.
Okay.
We trade, you'll hear two terms. Okay.
Okay.
You'll hear long and you'll hear short.
Okay.
Okay. Long means you're buying it and hoping it goes up and you're going to sell it, right? Like your normal way of thinking, right? You buy
Yep.
low, sell high.
Yep.
That is being long the market. Now,
Okay.
so I'm thinking the best way to explain this. Okay. So the other side of the market, okay, is being short.
Okay.
Okay, being short the market. Now, follow me here. So
Yes.
you can be short the market and profit when the market goes down. So if we're talking about stocks, okay, remember our normal thinking is buy low,
Yep.
right? We buy the shares, right? And then it goes up and we sell the
So,
shares and we make the
yep.
difference, right, in between. We
Sure.
bought it at 10 bucks, it goes up to 11, we sell it, we make a buck, right?
Yep.
When you short a stock, okay, you sell it first.
Okay.
Okay. Now follow me. I know I saw your face. Follow me here. I'll walk you through this.
Okay.
So we borrow the shares from our broker. Okay.
Okay.
And we sell it first. So when say we borrow 100 shares from our broker,
Okay.
right? And we sell it, we sell those shares, okay, at $10 a share. So 10 times
Okay.
100 is $1,000, right?
Yep.
Well, so we have we sold it first. So
Yeah.
$1,000 hits our account.
Okay.
Okay. Now we don't owe the broker any money. We owe the broker their 100 shares back
Okay.
because they're on loan from the broker, right?
Yep.
So we have to buy the shares back that we loaned out to the market when we sold them.
Okay.
Okay. So if we sell them at $10, we want to buy them back lower.
Okay. Yep. That makes sense because then you'll make some
Then you
money.
make the difference, right? So
Right.
if you sell them at $10,
Yep.
right? Sell 100 shares at $10. So $1,000 goes into your account.
Yep.
You owe the broker 100 shares.
Yep.
So you want to buy those shares back at
Yep.
the lowest cost possible to leave as much of that $1,000 in your account,
Yep.
right? So if you buy the shares back at $9, right? You've made $1 on the
Per
downside. So
share.
$1,000 hit your account, $900 came out of your account, and you've got your difference, your $100.
Okay.
And then the
Yep.
broker's got his shares back.
Okay.
Okay. So we trade both
Ways.
sides of the market. It's
Uh,
not just buy and it goes up.
okay. That makes sense.
Yeah.
Wha-
So you just learned that we make money when the market goes down.
Right.
And it's actually a little bit easier to make money when the market goes down because, like we said, the market goes up in stair steps, but when it goes down in elevators.
Right.
Right. So usually the downside is accelerates faster than when we're doing the stair steps up.
Right. No, makes sense.
Right. So every day that I trade, I'm trading either long or I'm trading short. Right. Every single
Yep.
day. Okay. And if I'm trading short, I want the market to go down.
Yep.
If I'm trading long, I want
You
the
want it to
market to
go
go
up.
up.
Okay. That makes sense. And I mean, I guess
No, please ask, because when I first heard
that's
this,
just, I'm still wrapping my head around it.
yes, when I
And
first heard this,
yeah, didn't you kind of go, what?
yeah, it kind of threw me.
So, but A, why does a broker let you borrow shares? Like,
Because they make money on their commissions. Every trade you make, the broker makes money.
okay, so they'll make money regardless.
Yep.
But what if, does it ever happen where you borrow the shares and it doesn't work in the right
Yeah.
favor? Then
Yeah,
what
absolutely. It's
happens?
just like it's just like on the other side. So if I sell the shares first, right?
Yep,
And I get the shares,
yep,
then I need, because I sold them first, I need to buy to close that position, right?
right.
Because I sold them first. So
Yep,
I'll have a buy order as a stop loss, just like I would on the
yep,
other side. So if it starts to go up, I don't want it to go up, right?
right.
I want it to go down. So if it starts to go up to a certain point, it buys back the shares and it covers, and it's a stop loss just like normal.
Okay,
So
interesting. Okay,
the easiest way, okay, is imagine this. Okay, I'm the broker.
yep,
Okay, and you think Apple is going to go down in value. Okay, just
yep,
pick Apple, right? And you want to sell it right now to go down, right? Because
yep,
you can sell it high, buy it down lower, right?
yep, yep.
So you come to me and say, hey, I want to borrow 100 shares of Apple to sell it, right? Because
Okay,
that money immediately hits your account. When you sell
right.
the money right into your account. So you come to me and you say, hey, I want to borrow 100 shares of Apple so I can sell them. And I'm like, cool. I'm the cool broker, right? I'm the cool broker. I'm like, sure, Sarah, whatever. Here you go. Right?
Yeah,
There's 100 shares of Apple,
okay.
right? So you owe me, you don't owe me any money.
I owe you shares.
You owe me shares.
Okay,
So I don't care if your trade goes against you, up, down, sideways, whatever. All you owe me is 100 shares of Apple back,
okay,
right? And it's your job to get me those 100 shares of Apple,
okay.
right? So you could sell Apple at $100, have, $100 hit your account, buy them back at $50, right? And you're left with $50 in your account, and I get my shares back.
Yep,
That's all it is.
okay,
And all this it sounds complicated, but it's done with the click of a button.
okay.
We don't have to, basically on a trading platform, you've got buy and sell, right? And if you hit sell, it's going to short.
So you're gonna have to come up with some really good props to
I
explain
know.
this one. What are you gonna use? Because I think I need to see this one to understand it
Yeah,
right.
I'll probably get out my batteries and my cotton swabs and have
Yeah,
one of them be a broker and one of them be the trader, and have the trader go over and borrow 10 cotton swabs,
right.
and the broker start complaining because, hey, you owe me my 10 cotton swabs back. I
I
don't
want them
care.
back.
I don't care about the money. I need my 10 cotton swabs back.
Right.
And then, I'll make it where somebody will go, he'll sell it short or something. I'll figure something out in my kitchen to do that.
Okay.
But yeah, so that right there, that's when I very first learned that, and I'm learning it about as soon in my journey as you are right now. I was only a few weeks into my journey when somebody told me that, and I was like, you're kidding.
Yeah.
They're like, no, you make money when it goes up or it goes down. And my first thought was, is that legal?
Yeah,
Right?
it's kind of what I'm thinking. Like,
That
what?
was my first thing. I'm like, do people know about this?
Yeah.
But what it actually does for the markets is it adds liquidity. All liquidity is a number of buyer and sellers. right? So
Okay.
if you have
Yep.
some people shorting, some people going long, it adds liquidity. It adds buyers and sellers everywhere,
Yeah. Okay.
right? So yeah, once I learned that, that's when things kind of really opened up, because I always felt like, okay, if I'm going to be a trader or investor or whatever,
Right.
I gotta, like, there's a whole lot I can't do because sometimes the market goes down, right? But then once I learned that, I'm like, oh,
Right. No.
do it on both sides. Okay.
So do you do both? Do you do long and short, you personally?
Yeah.
Now that you understand it, you do both.
Every day. Yeah.
Okay.
Every single day. Like, I trade futures, which are a different thing, but basically it's just a chart going up and down.
A- And
Um,
because it's going down so much right now, there's a lot of and you just say short trading? What do you call it? Short, what's
Shorts. There's a lot of shorts.
shorts? Okay, there's a lot of shorts going on
Short,
right
or you
now.
can sound even more cool at parties
Yeah,
and call it short interest. There's a lot of short
short.
interest.
There's a lot of short interest right now because the stock market is
Mm-hmm.
going down. Okay.
Yeah.
There's a lot
Very
of short
good.
interest right now. And then
So
when it's going up, you'd say there's a lot of long interest because the stock market's going up.
yeah, if we went way down, like right now, there's a lot of long interest in the market. There's a lot of people that are interested in getting long.
Right. Because it's going to eventually go back up.
Exactly. And we
I
don't need
know. I know. So I'm coming in at the right time.
yes. So as an investor,
Right.
when we're thinking on the investing front, we're not too worried about picking the exact bottom or the exact top, right?
Right.
We just want to catch the major move up over the
Right.
next however long. As a trader, obviously it's different.
It's different.
So there's a lot of long interest in the market right now from the investment side, because yeah,
Correct.
we're in deep discount. We're at the 2024 lows, right? Just like you said, think about your fence. If you go back 2024,
Right.
right? And that's what the price was, you'd be like, yeah.
I'm doing it. So, I mean, from a beginner standpoint, it would be, I mean, I'll be honest, it'd be kind of foolish right now to do any trading because it's so volatile right
Right.
now and dropping. But it would make sense as a beginner to get into investing right now because of where the market's at.
Yeah. Yep.
Got it.
And I
Okay.
mean, literally, like, it's as easy as, okay, I'm gonna pick just like the S&P 500 or just the Nasdaq or a company you like Petco is one. I'm trying to think of you, like Petco or something animal
Chewy.
related, like a company you like.
Chewy.
Chewy, there you go.
Mhm.
Chewy. And you just pick a day of the month and set it up where every 15th of the month or whatever. That's what I have. Mine happens on the 7th, but every 7th of the month, right? Money comes out of my
Yeah,
account,
it goes
spreads it
in.
out, over these certain stocks, and that gives you kind of that longer term thing. Did
Right.
we talked about dollar cost averaging last time, didn't we?
I don't think so.
Okay. Since we're talking about investing,
Yeah.
okay, dollar cost averaging, okay, is when, and this was just my latest video in my kitchen. So dollar cost averaging is when you're investing the same amount every single month in the same companies at the same time. Okay.
Okay.
So let's say you're investing $100 the 15th of every month.
Yep.
Okay. And let's say the stock that you're investing in is trading at $100 that
Yep.
month. Okay. So you invest $100, the stock's at $100, so you get one share,
Yep.
right? Okay. So next month, the stock, you invest your $100 and the stock is trading at $200 a share.
Okay.
So you only get half a share.
Yep.
Okay. So now you've got 1.5 shares.
Yep.
Okay. Well, the next month you invest your $100 and it's trading down at $50.
Okay.
So then your $100 buys 2 shares.
Okay.
So you're buying less when it's higher
Yep.
and you're buying more when it's lower. So
Yep.
your average cost stays down
Okay.
because you buy less shares when it's way up
Yep.
And you buy more shares when it's way down by just
Okay.
automatically doing it every month.
Okay.
Does that make, does it,
It
am I?
does make sense. And along those lines, buying in. So for example, like Tesla, right? It's really low. It makes sense to buy in because it's going to go back up. But who on earth can afford? Is there ways to buy like portions, or how do you do it? Like,
Yeah.
how can someone take advantage of it without having to spend like I mean, I could buy a share, like big deal, but how do you?
Okay. Perfect example. And I will send you, I'll email you my link.
Okay.
The one that I use, okay, is called Stash, Stash.
Okay.
Okay. And I've used it for years and years and years. And it allows you, it doesn't matter the amount of money. So if you took Tesla, right? And say
Yep.
you wanted to invest $5 in
Yep.
Tesla. Okay. And Tesla right now is trading at $243 a share.
Yep.
Okay. So you want to invest $5 in Tesla. Well, it
Yep.
automatically calculates for you how much of a share that is and
Ah, and
gives
that's
that
okay
to
to
you.
do. You don't have to buy a full share.
Nope. Nope. And
Oh,
I'll send you that link.
okay.
Because if you sign up through that, you get $30 to start with, and you can put it in whatever you
Ooh.
want.
Okay.
And that's a really good, that actually, you know what? That is a fantastic way to get started.
I would
You
love
don't,
that.
you don't have
Okay.
to buy a bunch of shares. You don't have to
Right.
buy, you don't have to trade and doing this real fast right off the bat.
Yeah.
And they have these cool little things every month. They're usually a couple months. They have what are called little stock parties where
Okay.
it'll say, hey, they had a Microsoft one the other day. And it was like, hey, Microsoft stock party, log in and claim your stock. So you log in, and every stock party gives you like 11 or 12 cents of a stock, right? It gives you a
Okay.
tiny little partial share, right?
Yeah.
But you can then use that and watch, because profits are all relative to how much you're investing, right?
Yep.
So, but as long as you're trying to stay profitable, right?
Yep.
Regardless of how little the money is. But then you can start to watch your investments. Um, and I think the one that I do is $3 a month. It's like you
Oh,
you
wow.
manage you
Okay.
manage it yourself, right? They've
Okay.
got one that they manage for you for $5 a month, but that would
Okay.
defeat the purpose of what we're trying to do here,
Right.
right? But then you can start, like I have mine, like I said, set up to go off on the 7th of every month,
Yep.
right? And I've got like 5 stock. I'll just tell you the 5 that goes into silver.
Okay.
It goes into GDXJ, which are junior gold miners.
Okay.
Goes into Bitcoin. It goes into ORC, which is a real estate investment trust.
Okay.
And it goes into Exxon. You've heard of
Huh.
Exxon,
I have
right? So
Exxon.
those
Yep.
are the 5 stocks that every month I have the same amount that goes in
Okay.
to each one, right?
Okay.
And you can change those whenever you want. I mean, it's your thing, but it's really cool. This is a perfect thing for you to get started,
Yeah.
because now you can watch it, right?
Yeah.
Watch it and you can invest. And do you guys have like a investment thing that you've been doing over the years
No.
or
So
anything?
what we do have, no, we haven't done anything. We're starting fresh, but we do have, so we have a financial advisor that handles pretty much, he helps us with the business, the nonprofit, our personal,
Mhm.
everything. And so what he's done now is, because we're finally getting organized, because we were very disorganized. Now with our business, we get paid every week by our lenders. And so what
Uh-huh.
he's doing is he now has separated every week when you get paid, this percentage goes towards your personal house, this goes towards donating to Cash's crew, and I want this much you put into investing.
Okay.
So that much each week now will go into stash, or once a month it goes into an account, and then we put it in
Right.
stash once a month. But now
Yep.
we're going to start, because we haven't. I don't know anything, so
It's
I've
okay.
never
You
done
can swear. You can say
it.
you don't know shit about it. It's
Okay,
fine.
I don't know
Totally
shit
fine.
about it. And so
Yeah.
I haven't. I mean, Rick used to, do that stuff and play around, but he doesn't know much either. So
Yeah.
both of us were, I mean, I'll be honest, I was afraid of it. I grew up, I mean, my dad always invested in gold.
Mhm.
And I remember him like getting upset when the stock market would go down and up. Like I remember that so much as a little girl, but
Right.
I've stayed away simply because of lack of knowledge, and it just
Mhm.
seemed way over
Yeah.
my head.
And,
But
and
it's something I'd love to do
yeah,
now.
and this is getting your feet wet. This is about as perfect scenario
Yeah,
as you can get. Because that, I'm glad you asked that question. Because yeah, you don't have to go buy. I mean, Facebook's trading at $532 a
right.
share right now.
And that's when I first saw that from you. I'm like, well, that's great, but how the hell am I going to buy?
Right.
I don't want to just spend my money and just buy one whole share of it.
Exactly. And you don't have to. You can spread all that
I
around. And
like that.
what you'll see as we progress, and this is something too that once you get all that set up, it takes like 5 seconds to set up.
Right.
Once you get all that set up, we can kind of use that as a
Yeah.
teaching tool, right? And we can look at those, stocks and what you're thinking about and whatnot. And we can use that as a teaching tool going forward. So we'll have something tangible,
Yep.
right? We'll have something tangible to work on. So this is perfect. I'm excited about that.
I am too. So I'm really trying to get into your brain. So every day you get up, you get on your computer. Do you first thing check those five that you invest in, or do you just go straight and look at the S&P 500? Like, what's your process?
Yeah, my process is when I wake up and I turn on the charts, I really don't look at those longer term things.
Okay,
I look at them once a day, maybe just for
got it.
giggles, just to see
Okay,
where they are. Because if they go way down, it's not like I'm getting out of them. So I'm just
right.
like, whatever, whatever. But if they go up, I'm like, woo. But then I open up my charts. This is what, and this will probably give you a seizure when you look at this, but
Yeah.
this is what I wake up to.
Oof.
Okay. This is what I wake up to. And it's honestly, once you start to understand what all these are, it's really not that difficult. But yeah, and then this is the ES right here. This is the S&P 500 futures, and
Okay.
this is what I traded today. This is what I trade
Okay.
most days. And I look
In
at that and
this.
see
Okay.
where it is. This is the
And
thing we were
that's
just talking
trading.
about, right?
Yep.
See where it is and what it's doing, in its series of moves.
Yep. So
And
right
then
now you're focused on short
yeah,
right now
and
if you're in your trading.
yep, and I always check the news.
Okay.
There's a really good site here. Let me do this. This is how I check the news every day, like the financial news, not
Yeah,
like
yeah.
um, regular local news. Like these are all the
For
financial reports that come out.
and it's Forex, Forex.
Yep, forexfactory.com.
Okay, got it.
Yep, and you can set it up like by these filters. You just go to
Yeah.
calendar, right? That's
Yep.
what you want is calendar.
Yep.
And you can set up these filters to filter what news events do you want.
Got it.
I just have all of them checked
Wow.
because I haven't really gone through anything. Um, but then like it'll show you today, like here's Friday, these
Yeah.
red folder events.
Yep.
Those are events that are going to toss our markets around. They're going to move them around, right?
Okay.
So we want to be very careful making any brand new trades right around these high impact news
Times.
events because
Got it.
it can fling our markets all over the place,
Got it. Okay, because people will
right?
hear that and then freak out. Okay.
Yeah. So I always know that this basically is the first thing I look at every day. So like
Okay.
if when I wake up on Monday, here's next week.
Yeah.
So Monday I'll look, what do we got? Do we have any red folder stuff? Oh, we got a orange folder. Um, that's a Fed member speaking, one of our Fed members speaking right here at 1. So that just tells me I don't really want to probably put a brand new trade on around 1 o'clock because it could get tossed all over the place. And that's it. And usually our news events are like at 8:30 in the morning or 10 in the morning. And it's
Yeah.
kind of consistent. But yeah. So I just check the news and
Fascinating.
yep, just check the news, make sure I'm not gonna be walking into some wild
Right.
news event where it's gonna,
Oh
fly all
yeah.
over the place. And we don't, here's something, another lesson for you. We don't trade the news. Okay. We don't trade the news, meaning if we think a good news report's going to come out, okay, we don't want to trade that. We don't want to trade the news at all because we have no idea how the market is going to respond. Okay.
Got
Good
it.
news, a lot of the times, okay, good news is bad for the markets and bad news is good.
Yep.
Okay. So if we get like a good news report, you would think, oh, the market's going to go up.
Hmm.
For some reason, it doesn't. It goes the other way. Well, we don't know how the market's going to respond to any news. So we
Right.
don't trade the news. I always say, if you want to trade the news, go to Vegas. It's more fun. You get a free buffet, right?
Yeah.
Because it's like gambling, right? Because you have no idea. You have no probabilities. There we go. We're talking about probabilities. When
Yeah.
you're trading the news, it's a coin flip.
Right.
And we don't want to trade coin flips, right?
No. Mm-mm.
So so yeah, so I'll check the news and then I'll go and I'll check, everything that I'm doing,
Okay.
um, for the day. And that's really about it. And then obviously I've got a live at 8:15 in the morning. I've got a live at noon every day. And then,
And on your lives, that's within Stock Dads, correct?
yep,
And so what are you doing? You're coming on and saying, this is what I'm seeing today?
yep. So I
And you're
go
you're
over,
analyzing this?
yep. So I go over, um, all of this,
Okay.
all of this. Like these are, like here is, get over there. Like here's crude oil. This is gold, this is silver and
Okay.
gold. The currencies like the euro, USD
Yeah.
currencies. This is Bitcoin. So I go over all those,
Yeah.
right? Those are just all different trading vehicles that you can use to trade, basically. Right.
Wow.
And that's kind of my day.
Okay.
And then usually in the afternoons, especially Friday afternoons, I don't trade because Europe is
Yeah.
closed. Europe closes at 11:30 Eastern.
Okay. Okay.
Okay. The European stock market closes at 11:30 Eastern. So after 11:30, we've lost half a continent of participation.
Right.
So it starts to slow like
Okay.
way down,
Okay.
right? Way down. Um, so yeah, so that's my normal,
Wow.
that's my